Hello and welcome. This is Binam, and in this video I would like to show you how you can make use of Bloomberg easily to construct a passively designed portfolio. And in doing so, I want you to go back in history, like you start the portfolio say 5 years ago, and then realize the amount of the portfolio now, i.e., what happens, how much money that you have now as compared to your investment 5 years ago. That's what I want you to do through the application of a simple passive portfolio strategy. And in order to do that, I would recommend that you make use of the EQS function, which is equity screening. So what I am also saying here is this passively managed portfolio in Bloomberg will be having only the equities or the stocks. So there's no bonds, no fixed income. So we will make use of EQS or equity screening function of Bloomberg in order to make investment using the passive portfolio strategy. Now here we would like to know how many stocks we need to include in that portfolio. So we need to look into the theories or what the literature says, and therefore I have some papers, and I would like to talk about this paper by Statman published in 1987. And this paper, I'm not going to read all the paper, but just the abstract you can see. And Statman finds that in order to make a portfolio well diversified, you need minimum of 30 stocks. So this paper is giving us some idea that in our equity screening, we would need 30 stocks at least. So that's one thing. Another thing is, how do we screen? Because that it is going to be a passively managed portfolio, we can apply top-down approach in our stock selection. So we'll be using top-down approach. And then in terms of criteria, what we can additionally add is price to earning ratio. And there is a small motivation here that you can derive from the paper by Sanjay Basu, paper published some time ago, 1982, published in 1983, and it reads here. If you just read the abstract again, you will find in the abstract that it says to you here, the results confirm that the common stock of high earning to price firms earn on average higher risk adjusted returns. So high earning to price ratio firms. Now if we relate that to price earning, that would be low price to earning. Yeah. So we want to find out in our selection those stocks which will have low price to earning. The opposite of high earning to price will be low price to earning. So with the finding of these two papers, now we can move ahead and organize our portfolio, passive portfolio. So first thing, in order to apply what I would say, think about a time 5 years ago from now. So to do that, you can simply go here in your Bloomberg screen, change this 2021 to 5 years ago, which will be 2016. So 2016 is there. So now apply the top-down approach. So in the top-down approach, you can think of the geography. So you can think of where which country, which economic region you want to invest. So let's say, just to make it simple, you want to invest in the US. So you can go to North America. So I'm going to expand it and just take United States. So I've selected United States and I click update. So now from the universe of a list of 88,351 companies available for trading, 5 years ago, 13,835 companies are available in the US. So now I would filter it down. So from in the top down approach, I've taken the region. Now I want to select the sector. So let me go to sector, and from the sector I would say I am interested in, let us take the energy company, and within energy, let's say I want to take oil and gas companies. So maybe this will then include companies like ExxonMobil, Chevron, those companies. And then I would also like to add some companies from, let's say, another sector, such as the industrials. Now, one reason to include these is because I'm thinking these are good time periods from 2016 onwards, and therefore I would like to invest in like cyclical stocks, like oil and gas. In industrial, there are many, but I can take electrical equipment manufacturing. Let's say what comes there. Oh, there are many there, so I will not take that because I would need to learn about them. So maybe I'll take healthcare. Okay, so I'm just going and selecting healthcare there. So I've got oil and gas, healthcare, and that way I'm also able to diversify. And finally, I want something from the technology as well. And in the technology, I'm clicking software, technology, services, and I will take technology, hardware, and semiconductors. So these three different sectors. You can see I have taken energy as a sector, and from energy I've gone to oil and gas. For healthcare I've just taken, and within technology I've gone inside the technology sector. I'm taking subsector, which is technology and hardware. So I'm going top down: economy, which is America, then sector, which is energy, then subsector industry, oil and gas, and so on for health and care and technology, hardware, and semiconductor. So now I have in my list 2,530 companies. And from this list, I want just over 30 companies. So now I need to give some criteria. Now let's say that from these companies, I want super rich companies in my list. Okay, so I want those that have a very high total assets. So now total assets, I will say rank top, I will say 500. So from 2513, I will say not 500, let's say 250. So that will give me 250 rich company in terms of total assets within America, from oil and gas, healthcare, technology, hardware, and semiconductor, 250. Now I will make use of the paper by Basho that I said to you, wherein we saw high earning to price. But in Bloomberg, you will easily find price to earning. So you need to find low price to earning. Yes. So price to earning is what you can see, and this is what you can take. Now you need to say low. And if you click rank, you can check if you got lower here. No, there's no lower here. So don't take rank. You can simply take less than. So price earning ratio less than. I can take, let's say, less than 10. So let's say, how many companies do I get? When I click less than 10, I got 29. So it's one less than 30. So I will delete this again. Now I will go and say price to earning once again, and this time I will say less than or equal to is also something I can check. Yep. And then I will say 12, and I hit enter, and let's see how many companies do I get from that 250 now. So I've got 45. So that's a good number. So it helps me diversify. So now I just need to click see results, and that is going to give me all those 45 companies with price earning ratio, which is going to be less than 12 times, and that's the total assets as well. You will see here all the price earning, they are less than 12, and these are the name of the companies, and I selected some rich companies, and you can see Apple is also there. So that's very good. And we also had the energy company, and you can see Valero Energy is there and some others. Okay, so that is the strategy I implemented in order to select my stocks 5 years ago. So now I need to find out, first I need to tell the computer how to organize this investment. So what you do need to do now is you need to tell computer that you want this to be in the portfolio format. You see here, you go to action. Once you see the result, go to action, EQS report, make sure that this is checked. Okay, so once you find that this is checked, then you go to the other tab, which is export, and see there it says portfolio. Okay, so you can then click portfolio. So click it, and then it is asking you to write something here. So here you can give your portfolio a name. So let's say I will give it a name which is top down 5 years ago. Yes, so top down passive 5 year. Okay, so that's the name. And here I'm saying drifting weight. So it basically means once you set up the portfolio, construct it, after that the portfolio value will go in line with the changes in the price of the stock. So that's fine to me. Equal weights, yes, this is what I want. So 1/n strategy, equal weighted strategy. So my money will be invested at the start equally in all the stocks. So that's fine. I start on 2016. So click select. So once you have done this, it will say go wait and so on. But in fact, were only 45 stocks, and it won't take long. So you can close it now, and then you can go to PRTU, which is related to portfolio administration construction. So remember the name of the portfolio you have given, and that's something you need to find. If you don't have many portfolios, then you don't need to worry. So here you can see I have so many portfolios, and I need to select the one that I just made now. So where is that portfolio that I just made? So there, this is not the one. Let me see, where is that portfolio that I just made? This is the name, top down passive 5 years. So now I can open this. So this portfolio is being opened. Now you see this is showing 2021, the date now. So sometimes you may see that prices for some of these stocks may not be there, but do not worry. So for example, for this stock MAPUS, the price is not there. But if you change this date to 2016 when you started, it will show you that price. So between 2016 and now, something may have happened. The company may have been delisted or merged, therefore the price was not there. But You see now the price is there. Also, it's 100% 99.9, and it's equally weighted at the start. You see 2016, so it has done the job. Now, after this, what you can do is you can make an assumption that when you started the portfolio had a value of 1 million, whereas here it is 100 million. So therefore, in order to change it to 1 million, you just need to click here and then change it to 1 million, which is 1, 1, 2, 3, 4, 5, 6. So then you click save. So it has saved now. It is currency at GBP, so leave it. Although they are all USD companies, you have it here in GBP, but you can see here the foreign exchange rate has been applied, so that's fine. Now you have done this, and you have also seen the you have also made changes on the portfolio value, um, and you can also change the date here to see the changes. Okay, so now what you can do is you can go and see these menus. You can see export if you want to export them, and they will appear in Excel, and that's something you can do. But first, what I want to show you is this function analyze. So click analyze, and another menu will appear, and that will basically tell you what has happened with this portfolio, how much value has this portfolio gained. Okay, so in order to find that, once you click analyze, I want you to click on this tab written performance. So once you click performance tab, then you will see there is something called holding as well. Okay, that's also something you can click. In fact, you can click holding now, and because it is going to tell you the value as of now. So you had invested 1 million 5 years ago, and the value of that 1 million now is 1.361 million. So it has gone up in value. So you've earned 361,925 on top of your 1 million investment. So that's something you can see here. Given you applied a strategy, given you applied the allocation in sectors, subsectors that you wanted to invest, and this is what has happened. You can also click performance and see something else, such as your total return analysis. So you can see here what is the total return of your portfolio. So this is like the equity curve, which I will explain again in my teaching in the days to come. But over here it is a good rise. From here onwards, it started to fall, but that's what you can see. And on top of that, if you are really keen, you can also compare. Let's say I want to compare it with S&P FTSE 100, let's say, or I think it's better to compare with S&P 500, because that is a good US benchmark. So here, therefore, you can say S&P. So you can get this S&P 500 index, and then highlight here, then select, and this basically means now you are comparing your portfolio performance with S&P 500 index performance. So you're doing much better, because this is below the white line, and white line is yours. So you can also see the return statistics here. Okay, and the performance difference is given by this green. So you have been able to see how you can create a passive portfolio in Bloomberg, and how the value has now changed. In this case gained the value from 1 million to, you saw it was 1.3 million. So that's something you were able to see, and I would encourage that for your own strategy for your own selection of economy, sector, subsector, you also perform this exercise, and that way you will be able to see how much um, value your portfolio has gained. Okay, so that's something you can see now yourself, um, and I would recommend that you do that, find out this value, because this is the value you would need to, you can use to make investment in active portfolio now, because what you have realized from your investment 5 years ago, you need to take that amount and invest in your active portfolio. This is what I have asked you to do in your assignment task. But then I also told you that you can click action and then you can export. Sorry, that was over here. Over here, action and export. So if you click this, then this portfolio will be exported in Excel, and that can be here. You see, this is being exported in your Excel. That should open. It's just my computer, I would say. Let me see where it is. Book 8. Yep, you see it is here now, and this is what is the portfolio, and this is how it has come. So you can see that we have been able to export all this, which is January 30, 2016. That is when the rebalancing was done, and it's only done once. Can you see? Which basically means this equal weighting was done on this date, and this is the last update, which is today. You start 5 years ago, don't do anything, stop now. Okay, so that's what you have done basically, and that's what you can see here. Yeah, when you click 2016, you see that as well. But anyway, this is what you can do. And another thing that you can do in terms of taking the evidence of the work that you have completed is the screenshot. Okay, so you can simply use tools such as snipping. There's also a function called grab in Bloomberg that can also help you copy all this. So you can copy like this and then take it in your Word file. But remember, not all 45 stocks have been captured here, whereas the way I showed you in Excel, all these 45 stocks are here. Okay, so that is basically your log of your portfolio, which is also required by your assignment task, that you have created the log of your portfolio. Okay, so just make the date 2016. You can make it, and then once it is like this, I'm just hitting enter so that it will appear there. And then once all the values are visible, I'll go to action, I'll click export, and basically that way I will get this file here that on the January the 31st I had these stocks for this price, and these were the exchange rate, and therefore my investment was made 100% in this stock, wherein I invested 1 million. Okay, so that's something you can produce as your evidence, and then you will go to, as I said, analyze holding, and in that holding, like I showed you before, you saw how it increased in values here from 1 million to 1.3 million, and that's something you can capture using a snipping tool if you like, something like this, and then copy it and then take it to your document somewhere, paste it, and then here you can say week 2 passive portfolio uh, log or evidence. Okay, and then maybe if you want, and that's all I want from you. So it's an easy way to construct the passive portfolio. You see, if you were to do this manually in Excel, it would have taken so long. So this is what I can say about how Bloomberg can be applied to make use of uh, portfolio construction. A very simple way. At the start, you say equally weighted drifting, and then name the portfolio, save it, and then analyze. After analyze, you go to holding, and that way um, export it to Excel. Keep the log as evidence, because you can put the log of the evidence in your appendix of your assignment. Okay, so thank you very much for watching this video. I hope you all will be able to make a great portfolio. Thank you, and finish for I finished this video. Thank you.